ETFs, this is the beginner guide on them, and let's talk about what they are. So what is an ETF? An exchange traded fund is a type of investment fund that holds assets like stocks, commodities, or bonds and trades on a stock exchange just like a regular stock. Think of it like a basket of securities you can buy or sell in a single transaction. Unlike traditional mutual funds, which are priced only once per day after the market closes, ETFs are priced continuously throughout the day, allowing for real-time trading. This feature gives investors flexibility and direct control over their holdings. So, it's an investment fund that holds assets like stocks, commodities, or bonds. Okay, and it trades on normal stock exchanges. Okay, so you can buy ETFs on most brokers and invest into them if you'd like to. So here's an analogy, the investment shopping basket pretty much. So imagine if you want to buy groceries. Instead of buying a single apple, a single banana, and a single orange, you can buy a pre-packaged fruit basket. That basket represents a single ETF. And an apple. Buying a single apple is like buying a single stock. And buying the fruit basket, okay, all of the fruit in one, is like buying the ETF that holds a collection of different stocks in one. So collection of different stocks in one, when you invest in that, it's going to be an ETF. And the beauty of the basket is that you get diversification and a variety of items in one simple purchase. And similarly, an ETF provides instant diversification by giving you exposure to multiple assets with one single investment. So when you're buying an individual stock, it's like buying the apple. The ETF is going to be a collection of different stocks in one, creating a basket. Okay, so an ETF is going to be a way to diversify your portfolio by just investing in one thing, pretty much. So here's some key characteristics of it. Diversification. A single ETF can hold hundreds or even thousands of securities, instantly diversifying your portfolio and reducing risk. For instance, an S&P 500 index ETF holds stocks from 500 of the largest US companies. Okay, a NASDAQ 100 index ETF will hold 100 of the largest tech companies. Okay, for example, as well too. So you're going to be able to take advantage of all the market sectors in one by just investing in the ETF and low cost. Many ETFs, especially those that track major indexes, have significantly lower expense ratios, aka management fees, than actively managed mutual funds. This is because they don't require a team of analysts to pick stocks. Also, one thing about ETFs too, compared to individual stocks, is that typically you don't have to worry about horrific news a lot of the time. So if a stock, even if the setup is clean, has some bad news, setup could be ruined. A lot of the times with the ETF, the news that would have to affect it would have to be some large scale global economic news. Why? Because it's not just one stock controlling a lot of the ETFs. It's a multitude of them. So they support each other. Okay. But for NASDAQ 100, for example, a large percentage of it is being controlled by NVIDIA, for example. Okay. So it just depends which one you're invested in. And liquidity. ETFs trade on exchanges throughout the day, just like stocks do. This means that you can buy or sell them at any time the market is open. The market is open between 9:30 a.m. Eastern to 4 p.m. Eastern time, okay? New York time. You can go ahead and calculate your time, put it in an exchanger if you're not in New York, okay? Or if you're not on Eastern time. And this real-time trading is a major advantage over mutual funds. And the holdings of an ETF are typically disclosed on a daily basis, so you always know exactly what you own. And this transparency is a stark contrast to some mutual funds, which might actually only disclose their full holdings quarterly. So when you see your ETF, you can see it every single day, know exactly what you own, and you can keep track of everything like your own boss. Okay, so when you decide to start trading, owning ETFs, playing dividends, you sign up to be your own boss, pretty much. You're your own businessman. You need to treat it like a business. Make sure you guys are staying prayed up to God, staying humble, even when you start making big money. Okay, journal your trades, take it very seriously, and journal your financials. Okay, keep track of how you can improve, keep track of your emotions, and once again, stay prayed up to God most importantly. Don't give up, even when times get hard, or even if you lose money, and just stay focused. And let's talk about some types of ETFs. ETFs are categorized by the assets they track. So here are some of the most common types. So stock ETFs. These are the most popular type, and holding stocks from various companies, and they can be broad-based. So for example, tracking the total US stock market, or sector-specific, for technology ETFs, healthcare, or energy. Then we have bond ETFs, and these funds hold government or corporate bonds. They offer a way to invest in the fixed income market and can be used to generate income and reduce portfolio volatility. Then we have commodity ETFs. These funds invest in physical commodities like gold, silver, oil, or agricultural products, and they can be a way to hedge against inflation and diversify beyond traditional stocks and bonds. And we got international ETFs. These funds invest in companies based on outside of your home country, providing access to foreign markets and economies. And they can be regional, for example, Europe or Asia markets, or specific to a single country. And we have thematic ETFs lastly, a modern type of ETF that focuses on a specific investment theme or trend, such as clean energy, robotics, or cybersecurity. And they allow investors to bet on future growth areas, okay, or even AI, for example. And let's talk about how to buy an ETF. So one, you'd have to open your brokerage account, okay? You need to invest in an account, okay? Fidelity, Vanguard, Charles Schwab, Robinhood, okay? Choose one. Then fund your account, transfer money, okay? And then search for an ETF. You can use the ETF's ticker symbol, okay? Like VTI for Vanguard, one, for example. Find it on your brokerage's platform. Then you can decide how many shares you want to buy and place an order, okay? And after that, the ETF shares will appear in your account, and now you own a piece of that fund's underlying asset, essentially. So, while ETFs are a powerful tool, it's important to understand both the benefits and the drawbacks of it. So they're easy to use, very simple to trade, and they offer instant diversification for traders. They're low cost, they're generally lower expense ratios than mutual funds costs, and they're very tax efficient. The structure of ETFs can make more of them and more tax efficient than mutual funds, and especially for long-term investors who already get tax benefits if you hold a trade for over a year. And flexibility. It allows for day trading, short selling, and buying on margin. Let's talk about the cons. While many brokerages offer commission-free ETF trades, older platforms may still charge a small fee per transaction, which isn't too bad. The market volatility. And just like stocks, the price of an ETF can fluctuate throughout the day, and you may not get the exact price you want with the market order. So make sure you guys are knowing where you want to buy and make your trade based off your limit orders the best that you can. And if you have the market order, just make sure it's in an area where you want, and try to make sure it's not during a time when price action is spiking all over the place, because you might get filled in somewhere where you don't like. Let's talk about liquidity issues. And some niche or new ETFs may not have a lot of trading volume, which can make it difficult to buy or sell them at a fair price as well too. So ETFs has to get more profitable, they have to keep growing. And then as they grow over time, volume will come in, and inshallah you'll be able to make some money. So for most beginners, ETFs are going to be a fantastic entry point into the world of investing. They offer a simple, cost-effective, and diversified way to build wealth over the long term. By understanding what they are and how they work, you can start your investment journey with confidence. And remember to do your research and choose funds that align with your financial goals, and consider consulting with a financial advisor. Thank you guys. StackMODE for all trading education. I love you so much. Stay prayed up to God. Keep grinding. Peace.